Hi everyone, welcome back to J Trading. Today's video will be part 2 of the mini series called The Secret of Trend Line and Breakout. So last week I have tried to explain the basics of trend line and breakout with an example from Boom 500. As you all know, there are thousands of traders who are trading boom and crash, also volatility in derivative or binary broker, and most of them, almost 90 to 95% of those traders, they are losing their money continuously. The reason behind this is most of the traders, especially those who are trading boom and crash, they are into 1 minute. They are focused into 1 minute only. They don't want to see the higher time frames. They don't check what the market is making on the higher time frames, but they just try to gamble in 1 minute because on 1 minute, every minute you can make money on boom and crash. That's the thing which is attracting traders to boom and crash. There is opportunity every little minute. You can make money, right? They will be attracted by those 1 minute because every minute in boom and crash there is trend, right? On those trend you can make money. Let's say you sell on boom, you make money immediately. You will not be in loss. Let's say you buy crash, you will immediately be in profit. That's the happiest thing that most traders like. But behind that there is something called spike. So because of that, most of traders are losing money. They don't want to know the knowledge, they don't want to know the basics. So what I'm trying to do here is I'm trying to help you guys to know the basic things. If you want to scalp the market in 1 minute, it's okay, but you need to know what the market is doing on higher time frames. You have to figure out, you have to know every little thing inside the market, right? That's what we are trying to do here. And plus you have to know that the dream of brokers is to be billionaires, not to help you. Every trader, they have dream, they want to be millionaire. In the same way, those brokers also, they have dreams, they want to be billionaire. So if they want to be billionaire, they don't have to let you win. They are your enemy, okay? You have to focus, you don't have to be late. So you need knowledge. So this video will be the age or knowledge about trend line. We will talk about every little thing. It's free, you can learn from here because this is mini series. There will be about 6 or 7 parts. This will be the second one. So but if you want the VIP class or special mentorship, it's okay, you can talk to me. The link will be in description. So this chart is boom 500 from last week. As you all remember, we have seen this chart. We have figured out what the market was doing. It went up, the market went up like this, pull back again, went up, pull back, and run up. So this means the market is creating higher highs and higher lows. So we got our trend line. I'm just trying to revise for you guys. So we drew our trend line like this, and we waited for the market to break that trend line out of the line. So finally it broke, and then we also talked about the entry points, when to enter and when to exit. So we figured out where the market was reacting, the most reacted or rejected areas in the trend. So this rectangular area indicates the area where market has been rejected many times. We have seen all those in detail, and the market broke that rectangle also and again retested. So we entered our trade here when it retested that region, and finally we have followed the market all the way down. We were using trailing stop loss, if you remember. So our stop loss was around here above the rectangle. When the market retested and went down, we moved our stop loss down here, down here, down here. As soon as the market pushed down, the trailing stop loss also pushed down. That was what we talked about. Now let's get started. Okay, this is chart of boom 1000 from February 2, and it's 1 hour time frame. So the first step, as we have talked in last week video, is identifying the market which is in trend. First of all, clean your charts. If there are any indicators or any instruments that you have been using, clean them, because it helps you to see the market clearly. So when you look at this market, what you will see is the market is definitely on downtrend. It's very clear that the market's in downtrend. It has been going down. So the first step we have to do is figuring out where those highs and lows are. Very crucial points. Always figure out where those highs and lows are. So since this market is downtrend, we need to figure out where our lower highs and lower lows will be, because when the market is in downtrend, we will always have lower highs and lower lows. So let's see where our lower highs and lower lows will be. So we have higher point here, the first high point. Okay, so now let's spot where those high and low points are. Just look at the market and try to identify the peak points. This will be one peak point, this will be the second one, this will be the third one, this will be the fourth one. You don't have to be bothered, because it's just easy. Look at the market, look at the chart, clean chart, and see those obvious points. Those points should be obvious. So we have figured these 4 high points. Let me write on them. This one will be our first higher high. This will be our high point, and the second one is here, the second high, that's called lower high. This one is lower high because it's the lowest point from this first high, and the third point will be another lower high, because this is also lower from the first high, and the last one, that's also called lower high because it's lower than those. So next step, try to spot lower points. These were the higher points, right? So the next step will be spotting the low points. We have low here, another low here, third low here, and the final one here. So these points are the lower lows. Let's start from this one. This is low, first low point, and second one here, it's lower low. The reason we say this one lower low is because this point is lower than the first one, so it's called lower low. And the third one here, it's called lower low again because it's lower than the first low. And finally we have another lower low here. This is how you spot the higher lows, lower lows, higher highs, and lower highs. It's very easy. If the market is on downtrend, just figure out highs and lower highs, then lows and lower lows, as I just did here. So the next step will be drawing trend line, right? From the last week video, we have step to draw trend line, right? If it's downtrend, connect high points. If it's uptrend, connect low points. So since this market is on downtrend, we have to connect our high points. So let me draw a trend line. You don't have to be perfect, as I told you from last week. Just try to connect those high points like this. So we have a trend, we have a market on downtrend, and the next step will be waiting for the market to break out of the trend line. But before the breakout, we can also figure out if the market is getting weaker and weaker. The trend was downward trend, and we can know if the market is about to break the trend. How can we know this? Let me show you. As I've told you, these points were the lows, right? Low, lower low, lower low, and another lower low. The points were lower from the previous lows. But finally we have another point here. If you have seen this point, it's above this low. the first low is below this one, the second one. What does it mean? This means the market was unable to create lower low, but instead it created higher low. What does this mean? It means, let me write this, higher low. This just means the trend is about to end. I mean, we're not sure, just this is the indication. If we get this kind of indicators or signals, we just wait for the market to break the trend line. But this is also one of the signals to enter the trade. So we got our first confirmation. Let me write it here. Our first confirmation, we got our higher low. What will be the second one? The second one, wait for breakout. Wait for breakout. So after the first confirmation, we wait for the market to break out. Let's see if the market breaks out. After a few more candlesticks, the market gave us a chart like this. As we have expected, the market broke out of the trend line. Okay, as you all remember, this was our lower low and this is another low, and we got another higher low here. This was the first indication that the market is weak. It's weaker than the previous points. Previously it has been creating lower low. That's the strong trend line, strong trend that the market is going in that trend without any trend breakout. But finally we got higher low, which is an indication for weaker trend. The trend is about to break. So the market finally broke the trend line. But as soon as the market breaks out of the trend line, we don't have to enter the market, right? As we have talked in last week video, we have to wait for confirmation. So what will be that confirmation? The first confirmation that we can get is confluence area or support and resistance area. It's very easy. I think we can figure out from this chart. The first confluence area will be these 2 points. We can connect these two areas here by rectangle like this. Because the market went up and has been rejected by the area, came down, went up and again rejected, but finally it was able to break up, which means if the market comes back to this area and retests back, we can enter the trade around here, because we have two confirmations. The first one, we have got different low, that's higher low. The second one, breakout from the trend line. The third one will be the retest. So when the market retests this trend line, this area, we can enter buy. So before this we have to also figure out another confluence areas, because this area right here, it's also area, this area right here, the market has been rejected many times. Look, 1 time rejected, went up, came down, rejected, went up, came down, and again rejected, finally broke down. So let's see what we will get. Draw area like this. So if the market comes back and retests this area, you can enter. But if the market breaks the first area and comes down to the second area, we can also enter the trade around here when it retests. But let's see what the market will do. As you'll see, we got the result like this. Finally the market was on downtrend. We spotted our lows and highs, and we spotted one signal confirmation that the market is about to change a trend. Then it broke out of the trend line. So we have spotted our confluence area, these two confluence areas, and we have been waiting for the market to retest. But at this area right here, there was high momentum. The market went up powerfully. Then we have been waiting for the market to come back here and retest either here or retest either here. So as you see, retested around here. It didn't break the first line. If you see right here, the market has been rejected many times. We have around 4 candlesticks which are with long wicks. that indicates that the market has been rejecting that area. So we can enter many trades around here according to your account balance. Enter trade here because we got confirmation. The first confirmation, we got higher low. The second confirmation, market broke out of the trend line. The third confirmation, it retested on this high confluence area. So what are you waiting for? Just buy here. This is how you trade. Okay, if you want to scalp in 1 minute also around this point, go to 1 minute. You can scalp those candlesticks freely without any worry. You can enter trade here. So the market, as you all see, went up. This is about, like, if you measure these points from 10,595 to 10,96, yeah, it's around 500 points. That's about 500 points, and it's $500 only on one lot size. Just by waiting for days, like how many days we waited for the market, it has been created here. January 29 to February 3, there was downtrend. So we got our breakout on February 4, we entered on February 5. So only in 1 day trade, we entered on February 5 and we took our profit around this point, that's February 6. Only in 1 day we made $500 out of one lot size. Bruh, this is how you trade. This is how you make money. This is how you make money. Wait for the market to give you best opportunity. Don't trade every market you see, okay? Just wait for the market. When you get good opportunities like this, you can trade. On the next video, I will show you the very details and another new concepts on trend line, and we will also see many examples. So stay tuned, subscribe if you like this video, smash the like button. We'll come back. Adios.